Hello, everyone. Welcome to the Bar Smart virtual series sponsored by Freddie Mac, CMG Financial, Home Funded. In today's episode, from renter to buyer, we're going to address some of the questions around home buying and if it's the right time for you. With that, we'll take a look at commitment and the fear of, things you should know, and how the housing market is evolving. So I'm pleased to introduce Len Kiefer, Deputy Economist for Freddie Mac. Next, I'd like to introduce Gay Coratone, Senior Economist and the Director of Housing and Commercial Research at the National Association of Realtors. And then we also have Ashley Dixon, a Certified Financial Planner and Lead Planner at Gen Y Planning. So let's go ahead and get started. And we obviously have a power crew here to answer every question from financial planning to real estate to mortgage financing. And guys, I really just want to say thank you for joining. So Gay, if you would have bought a house 5 years ago, financially, where would you be from a housing expense perspective? And where would you be from an equity perspective? And the reason I ask that, we've seen this trend with rents rising. And if you would have had houses rising at the same time, you would have bought a house for a lower price 5 years ago with a lower mortgage payment that you probably could refinance even better today, which I'll have Len, you jump into that one. But I think it just, there may be a misunderstanding of what the true cost of homeownership is. And I don't know if you could talk to that.
Yes. So from an equity perspective, you're better off. I looked at the data, and if you bought a home 5 years ago, you're $100,000 richer now. And it's because home prices have just been rising. Now, in terms of the rent versus buy decision or rent versus the mortgage cost, rent costs have actually been rising about 3% a year, whereas your mortgage payment, that has been falling. And it's because mortgage rates have been declining. We're now at a 50-year low. So that gap between paying a mortgage and renting has narrowed. Right now, you're probably just going to pay $20 more for mortgage than you would to rent. And because it's a 30-year fixed rate, if you buy now, you know that mortgage is going to be fixed. But of course, Ashley was talking about other costs, but just on the mortgage payment alone, think about this. Fixed for 30 years, whereas rents could go up. So I think definitely the low mortgage rate and the housing prices have just made a home much more attractive.
That sounds awesome. And going back to kind of the emotion, I think the elephant in the room is the fear, right? We're in the middle of a pandemic. We're having a slight recession now. The last time we had a recession that this was this strong was back in 2008, 2009, and it was the direct impact or cause of that was said to be the housing market, right? Len, obviously you joined Freddie Mac in 2009, so right in the thick of it. What did you see with respect to what you've measured as we came out of that crisis from pre and post crisis? Because I think with being in a pandemic today, it's not even close to as bad as what we saw back then, but I think that's something people kind of they think about. So I figured the easiest way to do it is address the elephant in the room.
Yeah, it's been a dramatic decade in the U.S. housing market. I joined Freddie right about a decade ago, 2009, like you said. And home values and housing transactions and the whole market has seen just tremendous volatility. Prices dropping a lot during the Great Recession, have since recovered, even after adjusting for inflation in many markets. Values are up, like, for example, you gave for yourself. And so for many Americans, they've definitely seen that. And you think about the coronavirus pandemic and the impact it's had on the economy, there's a lot of concern this spring when we were looking at the housing market thinking, well, is this going to be worse than the Great Recession for the housing market? Certainly for the economy, in many ways, it has been worse in terms of unemployment, job losses. The economy, fortunately, seems to be on the mend, but it's slow going in some sectors. But the housing market has done remarkably well, helped out by low mortgage interest rates, but also pretty strong fundamentals for housing market demand. So at least so far, through the late fall of 2020, looks like home values, instead of falling, have actually accelerated a little bit here in 2020 because there's tremendous demand. Folks are looking for space. There may be a shift towards preference to own homes because you want to get into, let's say, less dense places. All of that has conspired to help push home prices up. That doesn't mean they'll stay up forever. There's still considerable uncertainty about what the future may hold, and certainly looking at the history of real estate, there can be volatility there. But at least in the short term, looks like all the pressure right now is upward on house prices. Doesn't mean they'll always go up, but we're seeing prices seeing considerable upward pressure over the last few months, potentially even into next year. So we'll have to see how the pandemic plays out, and how the economy goes, whether or not that will be sustained.
Okay. All right. So let's dive into this. Let's talk about the current market because obviously it's in flux and there's uncertainty. But Gay, I'm going to kick it off to you. If you were looking at rents nationally, I know you said it's been increasing at 3% historically. What do you think is going to happen in the future? And taking account for all the things that are happening today around supply, what do you feel people can expect? And maybe even more so, should they expect different experiences, whether they're in more of an urban area or a more of a remote or suburban area?
Real estate is local, right? So nationally, I did say that rents are rising up around 3% historically, but just I think in the past few months after March, when the pandemic hit, we've seen rents go down in areas like New York, San Francisco, Boston, these areas where you have a lot of tech workers, and so rents have just come down there, whereas in the other areas, for example, just looking at California, Sacramento, rents are up there. So that the shift in rent there indicates to me that people are moving from the city to the suburbs. The other thing also is cost, right? So renting and buying a home is more expensive in the city compared to a suburb. So given that we're right now more of a state still of uncertainty, unemployment is still high, so certainly price plays a key factor. So I would expect that rents in your more expensive cities and also the dense cities will tend to go down, whereas the rents in the suburbs and further out in the city will tend to rise.
Okay. All right. So Len, on the mortgage side, Freddie Mac does a great job of tracking everything. I get to sit on the advisory committee for you guys, so I get to hear all the great work you're doing in that area. With respect to mortgage readiness, what are the trends you're seeing with people?
Yeah, we talk about housing, the investment, the emotion, but also a question of whether or not people are ready yet, given their life situation, given their, income, given their credit, and so the big question with the millennial generation being so large, are they going to be the supply of new home buyers, or are they going to tend to be renters? And one of the things that colleagues at Freddie have been doing for a number of years now is try to understand the pool of potential home buyers, right? Folks that maybe haven't yet made the leap into home ownership, but do they look like, if we look at their credit, their income, and other attributes, do they look like they might be a good potential candidate? And how many of them are there? And so a number of my colleagues have done some excellent work looking at this, what they call mortgage readiness. Do you have good credit? Do you have, reasonable other debts, right? Do you have a lot of other debts that might make home ownership a challenge because you have to service those debts as well? Have you had a foreclosure or bankruptcy in the last year? And have you had other severe delinquencies on consumer credit? If you knock out those borrowers and say, well, maybe those folks, maybe the mortgage readiness is a little bit further down the line, and you just look at the folks who have not had those dings, there's a tremendous number of them. About 37 million potential home buyers out there that today could potentially qualify for a home mortgage but have not yet. Of those, 24 of them are millennials in the millennial generation. Just a tremendous potential for home ownership. The real challenge, of course, is whether or not they can find a home to buy, because in many markets the competition is really fierce. It's heated up a lot in the last number of months as we see a lot of folks interested in buying homes but not able necessarily to find them because there's just few for sale. But in terms of the mortgage profile, looks like they very well could make that leap. And so from an industry perspective and folks who are looking out there, there's a lot of folks out there that potentially that might make sense. They might be on the fence emotionally or other things in their life that they maybe need, they may need to think about it and drive it. But at least from a mortgage credit position, they look pretty good and look pretty strong. And so there's a lot of potential there. And as we look at that population, it's only growing. It's only growing as sort of the generation continues to age. Real question with the pandemic, where the economy is, but so far in the more recent data, still a lot of people in a pretty strong position where mortgage life cycle could make a lot of sense for them.
So when you're looking at your customers that fall into that millennial bracket that are looking to become first-time home buyers, are you seeing any trends that stand out to you?
Yes. I mean, I think with the percentages and the numbers, I can definitely see that in our client base. We have some that are such good savers and they know they're mortgage ready, but it's the uncertainty. They're not sure. They're their fears. But then you have the other ones that it's like, really, okay, is this your goal? And how much of a goal is it? What is the long-term range and the expectation of the house that they want? I feel like a lot of the millennial generation think they should qualify for the same house that they just graduated out of, where their parents worked up towards that house. They grew their jobs, their income. And so they think they should move down the street from mom and dad, when in reality, their income is the starter home and the smaller homes. And so thinking that reality check for them, looking at your income, and it should be maybe 3 times your income is what you should be looking at for your first mortgage payment, and helping bring them down. And then if they're married and they both have high paying jobs, let's look a little bit into the future, and maybe let's not stretch ourselves going off of both your incomes. What if one of you decides to stay home when you have kids? So really trying to just be mindful of that first starter home and what that purchase looks like.
Let's go to prices. So, and I know we touched on this a little bit, but it's more along the lines of affordability. So if prices are going up, yet interest rates are going down, may offset a little bit, there's still the question of affordability. So Len, on your side and with Freddie Mac, how do you guys define affordability, and what trends are you seeing in that area?
Yeah, that's an important topic, because you think about sort of whether or not someone can afford the home, right? That's essential, right, for successful and sustainable home ownership. There's 3 major components of that. There's the income side, how much cash flow does the household have to manage their debt. There's the price side, how expensive is the home that they're looking to purchase. And there's the interest rate side, which is sort of going to affect their financing costs. Recently, we've had a string of record low mortgage interest rates, which have just been unbelievable from a historical perspective. This week, just in fact, of the late October here, we printed another record low 30-year mortgage rate of 2.81%, which is just historically, we've never seen anything like that. I've talked to other economists and researchers, looking back into, beyond our survey, which goes back 40 years, there's just never been such a low interest rate. And that does a lot to support the prospective purchasing power of homeowners, because that lowers down payments. In fact, on the refinance side, we've seen a lot of borrowers refinancing to lower their payments. They're saving about $2,000 a year in interest payments, lifetime savings, something like $10,000 for a refinance borrower. So that creates a lot of purchasing power. But on the flip side, we've seen home prices rise well above income in a number of markets too. As Gabe mentioned, it's very location specific. And in many parts of the country, we've seen house prices growth running close to double of income growth. And over the long run, that's not going to be sustainable. So from an affordability perspective, there's a real challenge in many, many markets, because even though interest rates are low and incomes have been rising for many, that hasn't net totally canceled out the effect of higher home prices. So from an affordability perspective, can still be a significant challenge. Nevertheless, these record low mortgage interest rates are helping a lot of prospective home buyers, make it pretty attractive. And the fact that you can lock that in for 30 years, we don't know, interest rates could in fact even go lower, right? Maybe we'll have more record lows. That's a very real possibility, but it seems pretty attractive to lock in for 30 years, well under 3%. That's a historic deal, looking back. And so many homeowners that are doing that are finding that a very powerful ingredient in their affordability perspective as they look to purchase or buy a home.
Okay. Now, skipping past consumers, when realtors are looking at this, Gay, I think you're the perfect person to answer this question. How are they dealing with the affordability challenge? Because again, I know it's local, so you're going to have some areas where it's not a problem for realtors. In other areas, it's a really big problem for realtors. So at the NAR, how are you guys approaching this problem?
I think the main issue right now that's hampering affordability is lack of supply. So we've seen in the last months prices across all regions just rising by double digits, and they're rising by 5 times income. So certainly, in terms of affordability, that is not sustainable. Mortgage rates are helping, but the problem is where you're going to get the down payment, right? So how are we doing that? I think we've always stressed that supply is really key. Of course, that is easier said than done. You have to deal with issues like, how to get the labor, how to deal with zoning regulations, where like 80% of zoning in the U.S. is still probably per single family. And with the pandemic, I think, the move towards denser housing has probably taken a setback there because people just want more space. We at NAR are looking at that. So we're commissioning a study on how to incentivize maybe training for construction workers. And certainly mortgage rates are low now, and we expect them to be low over the next 2 or 3 years with unemployment still low and the Fed still saying that they're going to have, relaxed monetary policy.
All right, so we've talked a lot about different aspects of home ownership, where the market is. Let's just talk brass tacks, right? Because I think that's what everybody wants to know here. We're in the middle of a pandemic. Things are changing. Gay, I'm going to throw it to you first. Is it even a good time to buy right now?
Well, okay, so the decision of whether it's a good time to buy or not, I should emphasize, is depends on the individual circumstances, right? So, and I think Len has already alluded to this. First of all, you take a look at your income potential, right? Your job security, your job certainty. If you think that your job is secure, well, the next question is, do you have the down payment? Have you saved for it? Let's just take a look at the pure price impact. Is now a good time to buy? I would say yes. So we know that mortgage rates have dropped to their lowest level in 50 years, 2.81%. And we don't see house prices falling right now because supply is just so tight. The economy is certainly recovering much faster than it did during the Great Recession. There was a quick drop, but there's also a quick recovery, that V-shaped recovery. So if you're ready financially, job is secure, your personal circumstances are such that it's time to think that you move out from your parents or from an apartment and, buy a home. Yeah, it's a good time to buy right now.
Okay. And looking at the craziness that we're in now, Len, I'm going to ask you about forecasting. What do you see as the long-term outlook? Will the craziness in the market subside? What can we expect to come in the next 2-3 years? I know that's hard because you don't have a crystal ball, and essentially it's the hardest probably time to predict, but what do you see coming?
Yeah, it's been really remarkable this year in a number of ways, but particularly around economic forecasting, which I and my team back at Freddie do every month, and this year continuously looking at things as they've evolved, is just sort of the strength of the U.S. housing market. Back in the spring when things looked very dark for the economy, we weren't sure what was going to happen with home values. We weren't sure what was going to happen with home sales. I mean, we knew they were contracting. We didn't know if it was going to be a long slog back or it was going to be a quick recovery. And the housing market has shown a lot of strength, helped out by low mortgage interest rates and strong fundamentals of demand. Housing market's actually looking up by a number of metrics this year, even with the global pandemic and a severe recession that maybe we've had a strong bounce back, but a very, very hard hit in the spring of this year. Longer term, I've been optimistic about the U.S. housing market because I think the fundamentals of demand are very, very solid given the population over the next 3 to 5 years. There's just going to be a lot of prospective home buyers and renters who are going to provide demand in the housing market, help support home values and rents. So longer term, I've been thinking that the housing market is set up nicely for a number of good years. Whether or not we'll see less craziness, I mean, I hesitate to say that because who would have predicted what we saw in 2020? I would be thankful if we had a relatively, uninteresting year in the economy in 2021, a smooth recovery, people getting back to work, families seeing their incomes on the mend. That would be welcome, but who knows? We'll probably be surprised. Our forecasts there'll be twists and turns, but I think over the long term, next 3 to 5 years, the U.S. housing market is set up for some pretty solid years.
Okay. And then Ashley, what are you telling your clients today?
Pulling from both of those comments, I would want to say timing wise, if income's good, you have some down payment, you have some cash that's not in your emergency fund, some additional cash. We don't want to pull from your emergency fund. We don't want to pull from retirement accounts, right? We want to make sure those buckets are doing their job, and that's separate from your home ownership bucket that you have to have as well, or your housing bucket, rent or home. So make sure you don't pull from those. But then also, the interest rates are so low, if the credit score is just borderline to the next level, right? So if you're just under 700 or you're just under 740, you can quickly change that and still be in this good timing bucket. So changing your credit score is really easy to look at. Doing those credit score simulators, go on there, see what it would take just to knock out one of your your credit card balances that you're carrying. Don't hurt your credit by opening a new one because they have all these new, point values. Open a new credit card and get 100,000 points. Like, just hold off if home ownership is something you really want to do to protect that credit so you get that low rate, even if you don't have the 20% down payment. I think timing those things is what we want to be the most mindful with. That's what I'm trying to work with my clients. It's like, unless there's the house that's selling like hotcakes, if we have a few months, you don't have the house yet, go talk to the mortgage lender, see what you even qualify for, what they're telling you, possibly get pre-approved. Let's see what you really qualify. And then let's look at the numbers. Let's, shop around. Let's do the homework and make sure that we put you in the best long-term investment, biggest investment you'll ever have, put you in the right vehicle to get started with that.
Final thoughts. And you guys have all given great advice. So it's going to be tough to come up with a final thought because I think we've covered a lot of ground today. But if it's okay, can I get a final thought for maybe somebody who's renting today and is considering it, and maybe it's something we haven't talked about? And Ashley.
Yeah, something we haven't really talked about is asking for help for that down payment. So interest rates are low on cash accounts right now. People are uncertain about the stock market. Your family members may have money that they're willing to invest in you and your home ownership because they know this is the great time to buy too. This is everything we're hearing, and they would love to support you in that. So just ask for help if you need a couple $1,000s, whatever it is, explain it. The worst thing they can do is say no, and you go elsewhere. Also look for resources in your community and other mortgage lenders that have gifting programs. So I would just ask for help and share your goal with others and let them help you with it.
So unfortunately, you hit on something that we have personally at CMG Financial. So I'm going to give a shameless plug here because I think with regards to Freddie Mac, we are the only lender that has the ability to crowdsource a down payment with our program Home Funded. So if you are falling into that bucket where you are trying to raise your down payment and increase it, and you have family, and whether you're getting married, because obviously you're not in the conventional wedding today, and or you have other celebratory activities, might as well go towards a home versus stuff. So again, shameless plug, but you set me up, Ashley. I couldn't resist. But Len, sir, any final thoughts that you'd give to people listening today?
Yeah, I think one thing that's very important for prospective buyers or even current homeowners who are maybe looking to refinance or move up is to shop around for mortgage rates. We see a lot of variability in the rates that borrowers get and terms, so it might be worth checking with other lenders or checking with other folks just to see what's available, what programs you could qualify for, or what type of mortgage you are. A lot of buyers don't shop around, and they tend to may pay a little bit higher interest rate. So you potentially could save yourself, not guaranteed. You may get a great rate initially, but it's worth perhaps making a phone call or taking a look on the web to see what other rates or programs might be there available as you're looking to potentially buy or even refinance or move up.
All right. So, Gay, what about you?
Final thoughts. I think I'd like to emphasize the value of home ownership. Certainly, we know that home ownership is good for society. You get more civic participation. As they say, if you set down your roots in the neighborhood, you're more involved. You have great memories for your family. A more stable neighborhood, more secure neighborhood, all the benefits of home ownership, but also it's the greatest source of wealth. And the thing is, wealth takes time to build. So if you wait too long, you're missing out. And we often hear realtors asking us, should I wait? The question that you asked, right? Should I wait? Or should I wait after the election? I even get this question, The time is important. And the longer that you wait, the less equity that you're able to build up. Now, can we predict that prices are never going to fall? No. The market has ups and downs, but historically, over a long period, we know that houses will always go up. So it's a great investment. It's a great tool to build home ownership. Owning a home is part of the American dream. And if you can, take stock of your finances, take stock of that down payment. And then if you can, you're in that position, go for it. Don't wait. Mortgage rates are also at historic lows. All
righty. So first off, everybody watching, thank you. Hopefully you've taken something away. You should have. This has been a great panel. Everybody on the panel, thank you guys so much for participating. So just to kind of give quick shout outs, Gay Coratone is from the National Association of Realtors, Len Kiefer from Freddie Mac, Ashley Dixon from Gen Y Planning. Guys, thank you so much for your time. We appreciate it. Thank you to our sponsors, Freddie Mac, CMG Financial, and Home Funded. So everybody that is watching, stay tuned. We're going to have upcoming panel discussions. And until then, this is Paul Akamati from CMG Financial saying thank you, and stay safe and good luck, and stay informed.